What's up, guys? Bill here. Welcome back to my ongoing 3-part series about how I prepare for a day of trading. In part 1, I discussed sentiment analysis and how I scan for setups. And today in part 2, I'm going to talk about charting and analyzing the data around those setups to help prioritize my watch lists and make decisions about what to trade. If you missed part 1, there'll be a link at the end of this video to it. But yeah, things we're going to be talking about today, gamma exposure, flow, dark pools. And what I use all this information for is never to just take a trade. I never take a trade based off just dark pools or just GEX or just flow. But once I have a list of setups I like, then I start to just try to prioritize those setups. So all the setups are worth trading at this point in my watch list, but maybe there's one that has great supportive flow and some GEX pulls above my price on a bullish setup and some nice support confluence through dark pools, that just makes it shine a little bit brighter than the rest of them. So I want to prioritize that, individual ticker, maybe size a little heavier on it than some of the other setups and things like that. We'll go through all that stuff. I also want to kind of revert back to what we talked about in part 1, about sentiment analysis, and remind everybody that the environment you're in always trumps your setups, right? So I have SPY pulled up. Let's look at SPY coming out of last week. We had chopped sideways, kind of consolidated here for almost 3 weeks in about a $10 range. And last week, on Wednesday, we finally broke out of that range, okay? And you can see that on Thursday, we rested, and Friday, we broke out again. So now, coming into this next week, I'm filming this on Saturday the 12th, coming into the week of the 14th. We are a little bit extended. It's not major extension. We're about $5.50 from the 9. We're about $6 away from the top of the Keltner channel 3rd extension, which is usually where you start to see SPY get overheated and need to pull back. So we're kind of in the middle, right? We're, I would say, medium extended. But there's a good chance that starting next week, we may see some more kind of consolidation or rest, a day like that, or a little bit of a controlled pullback into the EMAs, right? Some backfill, if you will. So, you know, that's something that's likely, right? No guarantee. We could just continue to go higher, but I'm going to let that realization help guide me in the types of stocks I'm looking at, right? So for instance, what I'm not going to do on Monday is try to get a fresh entry on something that broke out massively on Friday. Something like a firm, right? I'm not going to buy a firm up here. Should have bought a firm here or here, you know, reclaiming the EMAs after some nice strength in a peg, or after you've seen it break back and pop this wedge, buying it on the low volume inside day. You don't buy it up here, okay? What I'm going to be looking for setup wise is stuff that broke out before SPY did. And because it got a little hot early, when SPY was ripping Friday, it kind of chilled and relaxed or pulled back a little bit on low volume, right? Because some names move before the broad market. Some names move with the broad market. The leaders are usually going to move before. So here's my focus list for Monday. And you can see it's stuff that broke out before SPY broke out. CART broke out on Tuesday and Wednesday. Monday. And then Tuesday, it followed through again. And then Wednesday, when SPY broke out, it was hot. All right. You can see that it started to get up over this Keltner 3rd extension where it normally pulls back. It wicked over it and it pulled back and closed red while SPY had a breakout day. Now it's started to consolidate. And what do we have going on for Friday and into Monday? Inside day, super low volume. Okay. So I'm watching this for a day trade. I'm actually already in commons. I took an entry here. Why? Low volume, inside day, right in tight with the EMAs after the big volume move up, right? And consolidation. So we talked about all this in part 1, the types of setups I look for. So make sure you watch that video if you haven't yet. Other examples, Meta from the Mag 7. Meta has been the clear leader in the Mag 7, in my opinion, over the last several weeks, and you can kind of see it in the way that it's respected these EMAs. If you look at some of the other Mag 7 names, you can just see right away how choppy Apple is, right? How Amazon lost the EMAs and just had to recently reclaim it. How Google is still trading below the EMAs, even though SPY's above. Microsoft is really weak. It's trading below the 200, right? NVIDIA's been solid, right? But it's a little choppier. It had this big pullback while Meta was smooth all the way up. Meta gapped over its previous all-time high, made a new all-time high on a gap up on volume, and has since just been respecting the 9. And now it's starting to do what? It's starting to flag on decreasing volume and getting ready to try to pop this wedge with nice respect of the 9 EMA. Okay? So these are the types of things I'm watching for. The stuff that broke out a little early and has been resting while SPY finally caught up and the rest of the broader market finally caught up. Leaders. Oracle started breaking out on its last earnings in September when it put in a power earnings gap and has been flagging and respecting the EMAs and broke out earlier last week than the rest of the market. And so now it's a double inside day with nice confluence of GEX support and the EMA below. So these are all, it's all the same stuff, right? The setups never really change, just the environment does. So because SPY broke out just Friday and is getting a little bit extended now, I need to prioritize my setups based on that environment. I'm going to be looking for stuff that broke out before SPY and now is pulling back instead of trying to chase quote unquote leaders, chase the things that were hot Friday that, yes, they could continue higher, but we're looking for what's most probable, right? We're not looking for outlier situations here. What's most likely to happen to things like Affirm and MSTR and Coin and Upstart and stuff that put in huge days on Friday? They're probably going to take a rest day. Okay. If you're already in those positions, great. Leave some runners. Try to see how long your cushion can last. Take more profit if you get that unexpected continuation higher. That's awesome. But when you're starting a new position, you need to make sure your risk to reward is in check and you're getting entries in more tight price action. Okay. So that's my focus. And when I pull up all these charts, these are all finished, right? I've already got my levels drawn. But sometimes when I'm scanning, I get a stock I've never traded before. I haven't charted. Duolingo is a great example of that. So I'm going to walk through how I chart from scratch, go through all the process of GEX, dark pools, flow, and everything like that. All that analysis for you guys using this chart here. Okay. So when I come upon a chart that I've never charted before, something I've never traded, I just start assessing everything, and I like to start from higher time frames. So let's just pull up the monthly, and we can see here that this is a relatively young stock. It started trading in July of 2021, and it's trading near all-time highs. So all-time highs is a level I like to mark. That and 52-week highs. So that's how I mark all-time highs. Let's go down to the weekly. I'm also going to be looking for the most recent major pivots. So it looks like it's going to be probably here. Let's check the daily. Yeah. Okay. So the last major real big pivot was this level here. It's nowhere near the price currently, but we can see that this stock has been respecting the 9 EMA extremely well. So that level is nice confluence for me to look for other things around. We can also see that what kicked off this big uptrend and nice respect to these EMAs was its previous earnings back in August, where it gapped up over these EMAs after kind of being a week, in a little bit of a downtrend, and it popped that wedge. It broke that downtrend, right? And this is something called a price action cycle change, which Oliver Kell I guess he kind of invented that. That's his thing. But you pop the wedge on volume, you get the 9 to cross back over the 20, and that's a sign that, price is probably starting a new cycle up here, reversing from the bottom. And then you can see that it's respecting these EMAs the whole way. So this is a strong stock, trending stock. And lately, what happened, it got pretty hot, right? Let's pull up that Keltner channel. It was up over the top of it. And then on the 25th, had a massive day on huge volume, all right? So, of course, after a move like that, how heated it was, it needed to calm down and start to consolidate and flag. And that's what it's been doing. All right. We also see here what's nice. We already have some good confluence here with the 9, and we have this open bull gap right around it. That's really good support. So I already like this setup. That's why it's in my focus list. But now I'm going to see what else is going on with it. Let's check out the GEX. Let's check out the flow. Let's check out the dark pools and see if I can even like it even more. So via Tradytics here, and the charts page, which you find under market dashboard charts, I'm going to pull up Duolingo. And under price levels, I can get my GEX. And I'm going to mark those levels. Okay, so our largest negative GEX or GEX pull is at 290. We have a smaller GEX pull down at 280. And we have our largest positive GEX or GEX repellent up at 300 and a smaller one above that. At 320. Second largest. This page only shows you the two largest negative and positive, which is great because otherwise there's so many levels that you'll just end up cluttering up your chart. Okay, so what does this mean to me? What do these GEX levels mean? Well, if you haven't seen my video on GEX, I can link that at the end as well. Negative, in the most simple way possible. Negative or red GEX levels act as magnets to price, and green or positive GEX levels act as repellents of price. All right. And that means that as we come closer to 300, this is going to be resistance initially, most likely. And then once we overcome it, it could actually help push price away. Just like it repels on the way toward, it will repel and propel you on the way past it. All right. And these levels are more like magnets. So what I would prefer to really give me that extra confluence, extra conviction in this Duolingo setup is I want negative GEXs above because this is a bullish setup, and I'd like positive somewhere below where I'd also, where I'd also have other things. Like if this level 280 was a big positive and this 300 was red, that would be ideal, right? And it can change coming Monday because especially over the weekend, these levels update every day. They can at least. Coming off a weekend, you get a lot of options contracts expire on Friday, right? So, especially if it's OPEX, which it wasn't, but that can cause these levels to change. So Monday, we're definitely going to want to, a couple hours into the day, we're going to want to look at this again and make sure that these levels stay the same. And if not, adjust. Okay. But right now, just purely the GEX doesn't really add any conviction to my trade, right? It doesn't make me more likely to take the trade. All these setups I'm fine with taking. If I didn't know a thing about GEX or dark pools or flow, I would still take them. But what I'm trying to do is maybe just find a pecking order of these names and see which ones I like the best. Okay. So nothing major to see there, but it's great still because I know that if we break out 300 could be a pretty tough resistance. So I'm going to want to take profit there. Right. And things like this. Okay. Now, back to that chart page. We also have our customer positioning. We can see that that is bullish for next week, which is great. Okay. So that's a little bit of extra conviction. And let's check out flow. This is the live flow from options flow, live flow tab. And this is where during the market, when the market's open, this is going to be populating live in real time. And when the market's closed, when you pull this up, you're just getting the previous day's flow. Okay. And there's none for Duolingo. Sometimes on a Sunday, or this is a Saturday, but coming into a new week, what I like to do is look at the whole last weeks of flow, which you would just do by clicking like this and then apply, to get that whole week's worth of flow. But, let's see if there was any flow on Duolingo last week. None. There's just no, this name doesn't trade a lot of options, right? That's fine. For the sake of you guys seeing kind of what it looks like, let's pull up something from my watch list that does have flow. Meta, right? So, I like to use some filters, right? I like out the money, non-spreads. Okay. This just helps crudely filter out flow that has a high potential of being hedging. Okay. We can see that Meta was very bullish flow last week. Okay. This is very broad view. Okay. You got to dig in deeper. Flow is tricky. You got to dig in a little deeper to confirm some of these things. But if you're just trying to get a quick, analysis of the situation, this is one way to do it. Also with stocks that get flow, over here, you see the algo flow, right? That wasn't there on Duolingo because there was no flow. So you just had customer positioning. But this is the flow from Friday. So algo flow, when you pull it up during the market, it's showing you that day's flow. And since this is a weekend, it's showing us Friday's flow. The blue line is the net premiums and the white line is the stock's price. And we can see that all day, pretty much, you had people buying calls more than they were buying puts. And so Meta has great flow. So on my Meta setup, that would be a notch for Meta. It has very bullish flow recently. So that I would maybe prioritize Meta, right? Meta, let's talk about it. Meta also has a GEX pull above at 595, its largest GEX pull. So it's got a couple nice things going for it. It also has dark pool near support. Another thing going for it. So Meta's a great setup. So maybe I would say, oh, Meta, I'm going to move to the top, right? Okay. Just an example. Okay. So let's get back to Duolingo, and let's talk about dark pools, because we've talked about flow. We've talked about dark pools. There's a few other things you can check for flow, right? That's just the live flow and the algo flow. There's also Trady flow, which is going to show you any stocks that have been getting repeat orders on certain strikes. Okay. And this populates real time during the market open. But if you're, just searching later in the day, you might want to say, oh, Meta really hasn't had any repeat flow for 2 months. So that's not, that's not helpful. Okay. There's also OpenTra, and these are all found in these tabs over here, repeat flow and options scanners. This is an option scanner that shows hot chains. This is usually how I use it, hot change and then unusual activity. So you can type Meta in or whatever stock you're looking for flow on and see what's happened lately. There is a little bit of a glitch with this where it doesn't find puts contracts, but here's all the calls contracts that came in Friday and why they were significant. Volume over ROI cross, 5 times net premiums, rapid flow, all that kind of stuff. But what I like to do too is with the calls hottest chains, right? We see that it had a couple hot chains Friday, which is notable. Meta here, the 587.5s were hot, but look at the date. These were weekly contracts that expired Friday, and this is Saturday, right? So it had great flow Friday, But these actual chains aren't super relevant going into next week because they're expired. If we had seen stuff like what we see with PFE, where they're buying 1018s, or TSLL, where they're buying 1018s, then those could still be open going to next week and still and be, you know, another notch for the stock that you're trading. All right, dark pools. In the dark pool ticker dashboard, you can just throw in any chart you're tracking and get the most recent dark pools. So here's Duolingo. And what I look for in this chart is the biggest levels. So we see that the current biggest level most recently is down at 279, 18 million, which is quite bigger than the average print, right? So I would come over to Duolingo in 279, and I would chart a dark pool level. And this is good because it's more support confluence. So a stock like Duolingo, which doesn't trade a ton of contracts every day, like we can see what was going on Friday, very low volume on these chains. Probably best for swinging, right? Not trying to get in and out of super quick on a day trade. And now we have, you know, this open bull gap. We've got the 9 EMA, which it's held. If it does try to dip a little below the 9 like it did on this day, or it did back here a little bit, then we have this confluence of the GACs and some dark pool, right? So that's nice. That's a notch for Duolingo, especially if I could say, you know what, I just want to try to buy it on any dip, like any dip around here with all this confluence of support. That's where I'll take an entry. I feel like that's a great risk to reward in this tight flag on decreasing volume. Look at that volume, so low the last couple days. So that's another notch. And you could also mark this level as well, 11.6. It's just not quite as big. 11.6 million at 286.90. So same idea, but I just make the level a little smaller. And one thing too is if the level's old enough, and prices chopped around it quite a bit, then sometimes I don't even mark them. So this came in on 925, which is this day here. And it's probably, you know, not even worth marketing. I look back and I check it like this was the huge breakout day. This is probably profit taking, from this big move up by institutions. And you can see that the next day price washed right through it. And we came back up and tested it a couple times, closed over, and now we're holding it, which is fine. And if you want to keep it there, you can keep it there. But for me, I mean, that level, you know, it's pretty much used up, right? This level, on the other hand, when did that come in? 10.2. Okay. It came in on this day here, which was more nice buying on volume. That was probably institutions getting back into a trade or starting a new trade. Look at the respect, right? It held on this retest, and then we gapped up. So that makes that level still relevant to me and just further solidifies how it could be nice confluence of support if we get a dip. Or it could also be your risk off level. Like if you entered the swing up here, a close below this level that's already held once on a test, that would maybe be your sign to get out. Okay. Or especially if this 20 EMA can catch up in the next couple of days, now you've got even more confluence down here. That's the kind of stuff I'm looking for to make decisions about, you know, where to risk off in a trade. What else? Oh, not only can dark pools and institutional activity maybe help you decide like where to risk off of, it can also help you decide when to get in a trade or when not to get in a trade. And a great example of that on another chart is Palantir recently. So Palantir gapped up back in September on inclusion into the S&P news, and it just kept going, and it first test of the 9, it bounced off really hard on OPEX day for September, and look at that volume. Crazy, right? Well, that volume, a lot of that was this dark pool activity at its closing price of $37.20. And these dark pools, when they're this big, are super important to mark and watch. And what we'll see here is the next day we get some slippage over the level, which is very common. And the next day we're closing back below it. And then look at the next several days. It tests it every day and it can't close over it. You start to see that, and maybe you're not in Palantir right now and you're saying, okay, at least what I would say is this level's super important. And as long as we're trading below it, I'm not going to try to start a new position because who knows what's coming. It could be a sell-off. Okay. I want price to prove to me that this level we can reclaim it and overtake it. And the buyers can outweigh potential sellers or profit takers from OPEX day, right? So look what happens. The first time we close above it, after 1, 2, 3, 4, 5, 6 days of, not being able to. A little slippage at first, very common. And to each side it could do this. But 6 days where it's right, just toeing the line, right? Can't reclaim it though. First day it reclaims it. It kicks off a massive rally and the volume starts to come back in. Okay? So, is this how every dark pool level reacts or acts? No. But this is massive. And that's why I have the video about tracking the biggest relative size dark pools. Check that out. Because this was the largest Palantir activity of the entire year, and I think even longer back. It was a huge deal, okay? So when you get those type of levels, those are the ones you watch closely over the coming days to see what price tells you. So what did price tell us? This is a huge level. We cannot get back over it. So it was probably either a bunch of profit taking and buyers were kind of resting for a while, or it was even an attempt to short the stock or whatever. But either way, price could not get back over it. But once it finally did, boom, just gone for several days straight, making a massive move, right? So look for dark pools and use them like that. You can use them for reasons to get in a trade, places where you might have support with institutional buyers around your side, places where they've probably taken profits and maybe it's a sign for you to take profits. If you're not in a trade, maybe wait till price can reclaim that level to be careful that you're not buying a top. Okay. All that stuff is great. Let's see. Is there anything else that I've missed in talking about this today? Not really, guys. I think that is it. Yeah, that's really it. Essentially, what I'm doing is after I've performed all my analysis from part 1 and picked a watch list of setups, I'm going through everything I just did today in part 2 to just kind of build a pecking order. What do I like the most? What do I like the least? Now, remember, all these setups I would take regardless of the GEX, dark pools, or flow. It's just trying to build that extra conviction, trying to find that confluence at areas on the chart to improve my probability of taking a winning trade. Even if it's by 1%, to me, it's worth it, to get that edge, right? To increase it. So hopefully that helps, guys. In part 3, I'm going to be talking about risk management and, how I decide how to execute my setups. Like, am I going to buy the breakout or a pullback? Why? Where am I going to stop out on the trade and why? How am I going to size and why? Am I going to trade options or am I going to trade commons and why? All that stuff. So hopefully it helps. Hopefully you like it. If you're new to the channel, subscribe, leave a like. If you have any questions about anything I covered in the video, just leave a comment or find me on X and send me a message and I'll help you out.